In this segment, I will try and talk about the myth behind the gap. Look, what happened is that last week or 3 weeks ago, the market was at the crude was at a very interesting level right here, closed on a March 30th on a Friday. I think it was Friday, wasn't it? Yeah, I think it was Friday, March 30th. No, Thursday. Um, it closed at a very interesting level, possibly, trying to retrace from this area, or maybe, a lot of people would have a level for resistance. See, it was a very interesting level, but it opened on the next day's market open. It opened with a gap. Okay, so the gap prompted a lot of people who actually randomly believe in gaps and trading the gaps just to short the market. If you have shorted the market, this is a daily chart, folks. A daily chart, meaning these are huge price movements. So from 79 to 81, that is 100 ticks one day, and then another day from 79 to all the way to 82 almost, that's 200, 300 ticks. So you would be paying, just for you to chase the market to close the gap. A lot of myth is, the gap most likely will close, yes, but not according to your timing. There are rules you have to abide by, and the rules is, follow a methodology, follow a system, follow volume. You see, and then continued up. So if you were shorting to in order for you to see something to close the gap, or price to close the gap, you would be, kicked out of the market multiple times, maybe even, worse. The whole account is gone, and then maybe at one point you missed the short and the market went down. So to me, the crude remains bearish, although we have the sell indicator here showing some support, but it remains bearish. Why? Because, simply if I grab my volume profile, it still has this level to us. For those who know how to use volume profile, this is the bottom of the knife, right? So if the market keeps breaking it or touching it, at one point it'll break, and this is the top of it. See the bouncing from it. So this is, oh, what did I do? Hold on. Sorry about this. So this is a level where you have to pay attention to. So to me, it remains bearish, although I don't have an entry level. But at least I'm respecting the fact that I have now an idea. I'm anticipating the market. So it could come back down all the way to, if you draw your Fibonacci levels, it could come back down to 38% retracement from this entire move, which makes sense because this is the gap. It's about the gap, or it might come back down all the way to 50%. But at least you don't have to chase the gap or chase the move or the price just to close the gap on a random basis, right? So just to be aware of that, it's important.